Mr. Chairman, we have a question from Scott Shepard, the National Center for Public Policy Research. Year after year, Mr. O'Hanley, you claim that your embrace of ESG isn't woke and isn't partisan. Yet the two initiatives you most aggressively push on other corporations are equity and politically motivated carbon elimination schedules. But equity means illegal race, sex, and orientation based on discrimination now to make up for past discrimination until equality of outcome, irrespective of merit, is achieved. And politically driven decarbonization looks certain to disseminate economies and beggar the poor and middle classes. Both are exclusively hard left positions. There is no objective evidence to show that they are good for any business. Why specifically should you not be found personally liable for the consequences of all of this self-dealing in privileging your personal policy preferences over your legal duties to shareholders and investors?
Thank you for the question. We at State Street are one of the world's largest investors. We invest over $4 trillion on behalf of our clients. Much of that is in very long-term investments consistent with the liabilities of our clients, which themselves are very long-term. Hence, our stewardship does focus on long-term issues. And there's really two ways to think about our stewardship. As I said in my earlier remarks, it's about value to our clients, not our values. And secondly, it's about risk. And risk is nothing more than the proposition that more things can happen than will happen. And if one thinks about the long term and thinks about things like climate, for example, I think it's reasonable for investors to believe that there is some kind of risk out there that climate and climate change will have some impact on companies and therefore our underlying portfolios. So the focus of our ESG activities is, again, not about pushing any kind of personal policy, but ensuring that the boards of directors of the companies in which we invest are exercising proper oversight towards these risks. Climate is not the only risk that we ask them to look towards. We ask them to look towards other general risks as well as specific risks related to the company. As far as diversity, equity, and inclusion, I think it's fairly evident at a time like now when we're seeing long-term labor shortages that for that reason alone, we should be focusing on making sure that there's diversity, equity, and inclusion in the labor markets. But again, I would go back to this is about what is it that can create value for our portfolio companies and therefore, and in turn for our clients. And secondly, how do we ensure and what's the evidence that the boards of directors of the companies in which we invest are overseeing long-term risks? And I think our lead director, Amelia Fawcett, would also like to respond to this question.
Thanks, Ron. I just thought it was important for me to state for the record and for Mr. Shepard that as the lead director, I would like to note that the board strongly supports Ron and management and their efforts to create long-term shareholder value and support our clients, our employees, our investors, and our communities. Diversity, equity, and inclusion will be a key factor in our long-term strategy as it has been for years, and it will be a key factor in our long-term success. The case was made a very long time ago that diverse teams built on merit produce better outcomes for stakeholders, all stakeholders. Our clients, our investors, and our communities support our various initiatives in these areas and indeed have encouraged us to go further. Equally, all ESG factors have to be considered by any entity, whether it's a profit or a not-for-profit entity, looking to add value to their diverse stakeholders and to build sustainable businesses over the long term. And that includes bearing in mind a wide variety of risk. The sustainability of business models and communities including, as you quite rightly point out, the impact of climate actions on communities. We do need to look at those, and we do. Means we have to look at our ESG matters, and we do that regularly. let me be very clear. This is not about 60-second sound bites for partisan news programs. It is a complicated, long-term effort to produce long-term value for all our stakeholders and for us to create better outcomes for the world's investors and the people that they serve. The board and management is focused on this day in and day out under the talented, deeply committed, and unstinting leadership of our chairman and CEO. Thank you, Ron.
Thank you, Amelia.